Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Well, it's a late start to closing bell. 45 minutes to go to wrap up this Friday's session and the week, and it's absolutely flat. Markets have come off a tad bit from the day's high. The sensex has lost about 200 points plus from the intraday peak. The nifty is flat, hovering around the 26,200. But guys, this is the week where we can still celebrate that we hit all-time high levels, and week to date, we're still up a little more than 0.5% on the nifty, and mid-caps have actually fared a little better.
It's quiet. Celebration would have been better if we had managed to, retain at least a morning high, some momentum. But it's kind of fizzled out. But I think overall as well, because of the, truncated working hours in the US, because of the Thanksgiving holiday, I think we'll have more clarity when the new week settles in. For now, the bulls will have to just deal with the fact that they did reach that all-time high, but the conviction, second day running, it's missing for now.
And the key data point to watch will be 4 o'clock. The Q2 India GDP print, and Lata tells us it's going to be a good number. 7.4 versus 7.8%, which was an eye-popping number in Q1. So immediately after markets close, we'll train our eyes for that.
Absolutely. We'll be into the weekend by then as well. But markets will react on Monday morning. Well, let's find out how do you position yourself in the final hour of trade. Mitesh Thakkar from Bonanza Portfolio is joining us with those closing strategies. Hi, Mitesh. Good to have you back on the show. What's the call then on the Nifty? I mean, as ranged as it can be, right? Flat as ever. What do you do, Nifty Bank?
That's right, Nigel. I think very narrow range today. It's an inside day to previous day, which itself was a narrow day. So very clearly, very compressed kind of an activity. And I think this can happen. Typically, this is a market which is trying to break into all-time highs. It's right below the earlier pivot. And that firm decision making is still pending. That whether I want to go ahead or whether I want to come back, give a pullback, and then gather more strength and then go up. So for the timing, I think avoid the index, and that's what I've been advocating since yesterday. On the stock side, I have one buy and one sell right now. I would recommend a buy on LTIM, which is Mindtree, Larsen Toubro Mindtree, with a stop at 60.49 for targets of 61.75. And Oil India was a sell yesterday and today morning. I think now ONGC is also correcting. That's a sell with a stop at 247.25 for targets of 235.
Let's get to one of the big stocks today, and that is Gail. The stock is still lower by close to about 4-5%. Let's pull up that intraday chart. This is after PNGRB approved the revision order for the company's transmission tariff. But what's disappointed the street is that the 12% increase is much lower than what the company was hoping for and what the investors had penciled in. We chatted with PNGRB and the management of Gail earlier. First, let's listen in to what they had to say.
We have concluded the tariff interim in between the 5 years also. So next hike will be from 1st April 2028. So where we'll do up everything. It is clearly mentioned in the tariff order that next revision will be effective from 1st April 2028, wherein we'll all true up all the factors, capex, opex, relief, everything we will give.
Normally, whenever PNGRB processes the tariff, they moderate certain future capital expenditure and operating expenditure and true up in next revision. So we were expecting the tariff based on those revisions should be 70-72 rupees, but it has come down to 65 rupees, 69 rupees. There is a gap from our expectations of around 5-6 rupees. And since we are yet to go through the tariff order, we'll see what are those parameters based on which tariff has been moderated, and certainly if we feel that there are issues, we'll certainly take up suitably. We do not have any choice in terms of regulation. We have to apply the tariff approved by PNGRB on non-discriminatory basis to every customer.
Okay, that was a big story of the day. The stock hasn't recovered because, to sum it up, they were asking for a 33% increase. The market was hoping at least 20% will be given. But what's actually come through is 12%, and that disappointment is still playing out on the Gail stock. Gurmeet Chadha of Complete Circle is with us. Gurmeet, lots of stocks to discuss with you as always. Gail, Now, we know that there is another tariff, sort of consideration that will happen in FY28. What do you make of things and what's the call?
So we in general stayed away. So we both from Gail as well as the city gas distributor because of these frequent changes in which may come due to regulatory guidelines. Same is the case for OMCs. You never know what is coming next. So at best you can take a trading call. And in a market like this, it's not ready for any negative surprises. The reaction is extreme. One space we did like and made some money was refiners, pure refiners, not marketing, where we got into Chennai Petroleum at about 600 when, the market cap was 9,000 crores and it was available at like 1/3 the replacement cost. So was very, very cheap. And we saw diesel cracks going up, Singapore refining margins picking up, and then we exited, a couple of weeks back. So you can take trading calls as best, as I rightly said, and refining capacity also globally is very, very short. So other than that, we tend to stay away from most of these PSU names where there is always an overhang of government intervening.
Okay. So staying away from Gail, let's move on. Some other interesting stocks to track today. Paytm is an interesting one, and that's because of a brokerage view that's come in. It was actually something that Nimesh highlighted. It was our standout brokerage of the morning. Goldman Sachs is sounding quite optimistic on Paytm. Stocks up about 2.5%. Let's see if do we have Nimesh? Okay, we'll get to Nimesh in just a bit. But Goldman is saying that it believes that the regulatory environment is getting incrementally positive for Paytm. And now we know that the RBI has allowed Paytm to go on and, start onboarding merchants again. Gurmeet, what's the sense? Do you think this time around it's going to be different for Paytm? Can it be a value creator?
So, we have Paytm in our portfolio. This along with Eternal is something we've been invested for some time now. I think incrementally they have been more focused now on largely the payment and lending business. I think they were trying to do too many things with Paytm Mall, etc. I think they're getting back to core, and RBI allowing new onboarding is welcome. I think we'll probably give more fillip in terms of onboarding more merchants. They've done a terrific job on some innovations they have done, especially the sound machine, etc. Lending also seems to be doing well. They've learned their lessons even on lending in terms of what to do, what not to do. And I think even on the payment side, I think there's some incremental share in market share. So I think it's looking good for them. And I think at some point of time, at some point of time, the UPI will also be monetized. May not be done immediately, but at some point of time, it will start with something very minute. Can't run on free forever. So that's something we have in the portfolio. But the weightage is around 2% in the portfolio.
Yeah. I mean, UPI, speaking of UPI monetization, I always feel this. If the National Payment Corporation of India was a listed entity, perhaps we could have had our own giant, right? Maybe not to rival NVIDIA, but yeah, payments is India's big thing. It's public infrastructure, public digital infrastructure, so we don't have it listed in the market. But anyway, it's an important technology, as we all very well know. Gurmeet, just stay on. So Gurmeet already has Paytm, but let's go back and understand why Goldman Sachs is calling this out as an important stock to watch. Nimesh, this was your standout brokerage. So what's Goldman's thesis here?
Yes, sir, Biswana, they've put out some interesting highlights and interesting observations on why they've upgraded the stock to a buy now. The first reason is the regulatory environment. That was a big drag for the stock for the last couple of months and quarters and years. That is incrementally now changing and turning for the better. That's the key headline from the Goldman note. Now, this will mean that there is going to be the early signs of recovery in the Paytm's payments business as well as the earnings visibility. So, on back of that, Goldman expects that the 20% plus revenue growth is quite achievable in the very foreseeable future as far as Paytm is concerned. Additionally, there could be more positive, upsides in terms of earnings upgrades, as well as, if there are more regulatory interventions on the positive side, as far as the payments business is concerned, largely on the MDR. If there is something on that, that is going to be incrementally positive, and that will also mean that, not only that, but there could be more upside from the market share gain as well. That's the key thesis on which they've upgraded the stock. In fact, Goldman believes that the EBITDA margin can double in the next 3 to 4 years for Paytm, and at this price, the risk reward is quite favorable. So it's a big upgrade to a buy, but the stock price they've raised all the way from 705 to the new target of 1570. So it's a big target upside, but even from current levels, it's a potential 20% upside as far as the Goldman note is concerned.
Thank you very much for that, Nimesh. Lenskart is the other one doing very well in the consumer tech platform companies. This is on the back of a Jefferies bullish note where the target price is set at 500 rupees. And the stock, contrary to, during the time of the IPO where everyone was concerned about the valuation, is actually held up. The IPO price, issue price, was about 402 and Lenskart is still at 412. But we'll wait by to see what the numbers throw up. Earnings are tomorrow, and plus the 1 month lock-in is still to come in. That's Lenskart for you. We will slip into a break. We'll thank Gurmeet for joining in. On the other side, we'll invite Rashi Talwar Bhatia of Ashmore. Stay with us.
Welcome back. Absolutely flat market. Let's see what's happening on the F&O side. Nigel, any movement there?
Well, if you look at the Nifty is as flat as can be, and the VIX is well behaved. You like that, right? We don't want the VIX to spike up. So the VIX is well behaved even on days when the markets are lower. The other data point that we track is the Nifty PCR. The last I checked, it was at around 1.1, and Surabhi's confirmed that as well. So that's pretty okay. That's more or less in the middle of the range. You don't want it to dance away to around 1.5 like we saw a few trading sessions ago. But the options data suggesting today is yet another day for the writers. Because if you're writing calls or you're writing puts, you're making money. Just pull up a couple of strikes. The 26,200 put, well, fair bit of writing is what we're seeing out there. The premium has come down. At the start of today, I think it was closer to 90 rupees, came down to around 72 rupees. And if you look at the 26,250 callers, well, the premium out there as well has come down from around that 105 rupees to around 84 rupees or thereabouts. So there's writing on both sides telling you that the bulls and the bears is a bit of a tussle going out there, but they believe that in the near term, we could be in the bit of a range. What that could be, 26,000 on the downside, and on the upside, around 26,000, 26,400 or thereabouts, just going by the options data, because there is some call writing as well at around 26,300. Moving to individual stocks then, that are in focus in today's trading session. Lotus Labs. The street is waiting for a large trade. I'm not sure whether or not that's going to happen or when that's going to happen. The timing is important out there. So there were shorts. Today, we are seeing some of those shorts getting covered out, and the stock has bounced up in trade as well. So Lotus Labs is one particular name. Next up, you pull up Gail. There's big shorting out there. The stock is down 4.5%, and the opening is built up is massive. But as we said earlier today, when the markets opened up itself, I said that around 170 rupees, that's an important support. And, Mitesh had said it around 171, 172. If that can get defended, then maybe the stock bounces back from there. So there are fresh shots on the system. Varun Beverages, from the word go itself, you're seeing a lot of fresh buying on that counter. And that's an active counter, otherwise not very, very active, but a good amount of open interest built up on that particular name as well. Net, the Nifty, it looks like we are bracing ourselves for a better December as well, because that 20-day MA is deep, sub the 26,000 odd mark. So you'll have to go with a bit of a bullish bias for looking at the data points. Back to you guys.
Thank you. For that, Rashi Talwar Bhatia, partner and portfolio manager Ashmore, is now joining in on the show. Rashi, thank you very much for joining in. So how has 2025 been for Ashmore? What were your big calls, the big winners, where you went wrong with the positions that you've held? And looking ahead to 2026, how will you position your portfolio? What changes, what themes are you looking at?
Yeah, so, 2025 is not over. December still to go. And I've been here long enough to see many such years where December can change things dramatically. So I'm just hoping for a very stable December with no major upheaval. I think in terms of, for us, it's been a decent year. I cannot complain. And I think that's part to do with the fact that early on this year, we took a view that the domestic consumption financials were going to be a beneficiary. And when I say domestic consumption, I mean more on the discretionary side, because early on in February, it was pretty clear that the government was focused on, improving liquidity and supporting growth. And if you look at February to pretty much till the last GST cut, we've seen something come in either from RBI or from the government every month or so. And I think we're starting to see the domestic consumer that had got stuck somewhere towards the end of 2024 because of the evaporation of liquidity or RBI sucking out the liquidity now start coming to back into form. So I think that's kind of helped. And, it's interesting because if you look at, we're back to, say, September 24 highs, but as everybody said, the market is flat over September 24. Give or take a few, but if you look at actually sectoral moves between within the market, they've been pretty sharp and they've been pretty, large, so to speak, and that's the interesting part.
Indeed, it's not been a uniform kind of an up move. We've had quite a few winners in individual stocks, like an M&M has done so well, Bharti has done well, IT has dragged its feet. But according to you, for 2026, or looking ahead now, what would be the top three themes? And again, what would you be overweight sectorally? And what would you be underweight?
So I would, as of right now, continue to focus on the domestic consumption, consumer discretionary name, and some of the financial names, the larger private sector banks. I think these guys are going to be the biggest beneficiary of the liquidity influx that we're continuing to see. And it's just the starting point. We've just started to see data of literally 1 month. And I think what the point people are missing is that November and December, we saw a collapse in discretionary demand, autos, etc. And when we come in at a reasonable number, this November and December, we'll start to see data tomorrow. The base is so affected that the numbers will look good. So I think from that perspective, we are positioned for that. That's how we're positioned. IT is an interesting one, and we're constantly reevaluating that because we had a reasonably large underweight for most of the year. And valuations have started to look attractive. It has corrected, and the dollar or the rupee has weakened per se, but we're still not able to find complete conviction or stories that we like over there. So therefore, we are watching it and looking at it carefully, but we haven't jumped in as yet.
So, Rashi, if you had to tell us, your top pick would be what? The private banks?
And discretionary consumption.
Both those two?
Yeah, that would be, it would be the large private sector banks. When I say discretionary consumption, I would also go with the two-wheelers, the incumbents. We've seen one do well, but one has still lagged.
Which one you like? The big boy, the Thump, the big Royal Enfield, or the one that has bigger export exposure, or the one that's more rural focused?
Yes, you can go with any. I'm telling you, from a discretionary side, all of them will benefit. The rising tide will lift all boats. You can decide which one you like based on valuations, or based on the growth, or based on which product profile you.
But two-wheelers is something you like.
Two-wheelers is generally, yeah.
What about auto ancillaries? Some of those stocks out there, the PE has expanded quite a bit, and quite a few auto ancillaries, which I don't want to name because I don't want to be biased to any of them, but a few of them, they're looking quite good. And Street is bracing for a very good third quarter for the auto ancillary stocks itself. Are you playing that theme?
The joker in the pack is what happens to the US. I'm not sure. And a lot of the ancillary plays have large dependencies on the Western markets, Europe and US. And I am praying for a reasonably soft landing in terms of what we're seeing. But it's the same. I cannot be bearish on IT because US budgets are not getting finalized. Even IT companies that are delivering good quarter numbers in the existing quarter do not have an outlook for the future. They themselves are not able to see it, and expect auto ancillary companies that are in the supply chain of supplying to the companies in the same geography are going to be thriving, right?
What about consumer tech names, Rashi? A Lenskart, an urban company, Pine Labs, Grow. These are across sectors, but everyone agrees the potential is large, the earnings growth is strong. And if history is anything to go by, we've seen a Zomato and Swiggy also deliver on the leverage that comes in via scale. So where do you stand on some of these recent listings? Are they a part of your portfolio, the four that I named?
We don't generally talk about what is part of the portfolio and what is not. In general, we tend to be a little circumspect when it comes to IPOs. And that happens because we've not met the management enough, that we haven't seen quarterly numbers come out. We haven't seen, the regular set of information that we get for a lot of the other companies is not there when we're evaluating IPOs. So we tend to be a little more circumspect and stay away from IPOs for a bit. And we always meet management whenever we are offered those meetings, but are very clear that we take our time, because I like to see management 3-4 times before I can get a sense of who's optimistic, who's pessimistic, and judge even their demeanor when it comes to talking to investors. So I think the opportunities and all the names that you mentioned will come up at some point of time for us over the next few quarters.
Rashi, thank you very much for joining in. Just counting down to the close, still flat for the market. So let's find out what the mood is across dealing rooms. Nimesh is now joining in to give us some insight. Nimesh, after hitting all highs yesterday, at least in the first half, markets have gone quiet and consolidating.
Well, Rema, it looks like it's a Friday mood, right? Absolutely flat on the Nifty. There is really no momentum, especially in the broader markets. It's like, the momentum is really lost in the last many weeks. And even from a flow perspective today, there is a bit of selling as well, is what I understand. So FIs are slightly better sellers across the broader names. The sector which stands out today is metals. The index is up 1%, and some bit of traction seems to be clearly there in the metal names. In fact, there was an HSBC upgrade as well in those aluminum stocks. So a bit of momentum clearly visible in the metal names today. And from a flow perspective, selectively the financial stands out. Whether it's private banks or smaller private banks or NBFCs, rotationally there is a bit of buying flows into the financial space. So that stands out from a flow perspective, but absolutely flat in the Nifty. and zero momentum in the broader market names.
What about stocks?
Well, so the first stock on my list is Yatharth Hospital. The stock is down 8% after a large block. 7% equity got changed hands. I understand the promoter entity was a seller in today's block. Well, half or maybe part of the block was bought by the domestic mutual funds, but need to see the disclosures. But from a sell perspective, looks like the promoters have sold today, and that stock is under pressure. The second name is Motilal Oswal. Again, the stock has recovered in today's market, essentially because I understand the selling pressure from a leading FII fund is largely over. Remember, I've been highlighting that there are at least 38 stocks where one fund has to sell out because of the merger. So part of that selling seems to be over in today's market in Motilal Oswal. The third name is Laurus Labs and Lodab. Both are buzzing in trade, essentially on the back of buy flows. I understand one leading HNI investor has been actively buying into Laurus as well as in Loda. So that explains the move there. And the last one is IFL Capital. Every now and then there is the sense of some deal brewing and might get announced very soon. Remember, we actually reported a deal a month back about a private equity. It looks like the deal could be around the corner, and that's the reason why that stock is also up 5% in today's market.
Okay, all right. Thanks very much for that, Nimesh. He'll take a quick break on that note. Come back and then we'll have some of the final trading calls for today.
Welcome back. Let's get in, Mitesh, to find out if there are any last 15-minute trades. Mitesh?
Yeah. So, with the index not being very decisive, I think, some mild trades can be taken on the stock side, and I have one STVT and one BTST. So STVT on Astral, I think that's down about 2% closing in the day's low. So keep a stop at about 1451, 1452, look for a 1420, 1415 kind of a target on the downside for tomorrow. And on the buying side is Britannia. Now, the structure isn't good over here, but if you look at the last 1.5 months history, I think 58, 10, 20 has been an area where the stock has taken support at least on 9 or 10 occasions. So it's bouncing back from there. So we'll keep a stop at 58.30 or just below it, and a target of 58.85 can be looked at for tomorrow.
Okay. All right. Mitesh, we'll leave it on that note. Thank you very much for being with us through the week. You enjoy your weekend, and see you with the market again on Monday. Some comments coming in from the Commerce Secretary on the US-India bilateral trade agreement. The presumption is that the trade deal will be beneficial for both if the tariff is set at 25. Both reciprocal and additional tariffs will have to be addressed. So this is the Commerce Minister speaking, giving us the latest updates on this optimistic on finding a solution with respect to the BTA within this calendar year. That's interesting. That could definitely be. It's putting a timeline. I don't think we've actually seen a very definitive statement on a timeline just yet. He did allude to the fact that earlier it was supposed to be done by fall, and now he's saying that it could be done within this calendar year itself. So let's see. Let's pull up the Nifty and see if the market's taking note of these comments. Not quite. Nifty is still down about 15, 16 points. So those are hopeful comments coming in from the Commerce Secretary on the India-US.
But this is, when you start high, right? At the start of the year, when India was, say, gunning for a favorable deal at 10%, if someone would have said you're going to get 25%, we would have said, no, we want better. We want more. We want the best deal. Yeah. And now at the end of the year, after the negotiations have dragged on and you're sitting at 50%, and peers are also at 20, 25%, if you say 20, well, it's a good 25, you say it's a good deal. You take it, right? So this is what happens, right? When Trump starts at 50%, then 25% seems palatable.
Yeah, but it's been a tough year. India has stood its ground, one of the very few countries which has. And the negotiations are still underway.
Hopefully last leg.
Hopefully it's the last leg. And as the Commerce Secretary is saying, hopefully it will be wrapped up before 2025 goes. But with that, let's move on and talk about auto sales, because when we come back on Monday, it'll be that time of the month when we figure out whether the auto sales numbers are still ticking high or not. Now, it's a tough ask, Sudarshan, right? Because we had this bumper Diwali, the GST cuts, and now the reality has to strike. How might that reality look?
But the good part is we are expecting another month of a strong growth by the auto companies. And do you know the biggest surprise will come from which segment? It's going to be commercial vehicle, because channel checks are suggesting a major surge in the demand for commercial vehicle segment. As far as passenger vehicle and two-wheelers are concerned, we are expecting a healthy growth here also, especially for two-wheelers. Now, the one positive factor is the number of marriage dates this year in November 2025 has been much more than what we saw in November of 2024. That also is likely to going to aid the growth. Now, considering all these factors, passenger vehicle is expected to report a growth of 21%. Two-wheelers may see a growth of 15%, while commercial vehicle growth might come as high as 20%. Now, talking about the expectations company-wise, in the two-wheeler space, the growth is expected to be in the range of 8 to 29%, with Bajaj Auto being the biggest underperformer, where company can report a growth of 8%. And the surprising part is this time the biggest outperformer is going to be Hero Moto along with Royal Enfield, that is Eicher Motor, and both these companies may see growth of 29% each, while for TVS Motor growth can be of 22%. Now coming to passenger vehicle segment, Maruti is going to see a growth in somewhere in the range of 16 to 17%. M&M, like as always, it's going to outperform the segment, may see a growth of 22%. Hyundai may see a growth of 7%, and Tata Motors passenger vehicle also may see a double-digit growth. Come to commercial vehicle segment, both Tata Motors commercial vehicle and Ashok Leyland are going to see a high double-digit growth, and that growth range can be of 16 to 17%. Another good part, the channel checks are suggesting that not only November, even the kind of growth that we are seeing, even December month can be very good.
Thank you very much for that. M&M continues to remain in pole position through the start of the trading session. Still going strong, 2% up. The street likes yesterday's announcement about the new launch. feature-loaded and very aggressive pricing at nearly 20 lakh. Anand Tandon is now joining in. Sudarshan, thank you very much for that. The other stock Sudarshan was looking at was SRF, where Axis Capital today has upgraded it to a buy. And they see the chemical business growing at 23% CAGR over FY25 to FY28. So if you're looking for stocks with earnings momentum where there is visibility, Axis believes SRF is one. Anand, have you studied this company?
Well, not recently, but yes, it has been a company which I have looked at in the past. And overall, I could argue that, the chemicals industry, except for certain parts, is actually, it had been somewhat subdued and is now coming back in terms of the volumes that they are pushing out. Many of the companies have gone through a capacity expansion, which has either already started or is likely to start in the next few months. So the specialty chemical space is something that could be interesting. There are, of course, pockets in commodity space which are going to be a bit challenging. For example, chloroalkali, where a couple of the very large players are now coming into the market, which can dent the profitability or sales of the existing players and so on. But SRF is reasonably well positioned.
Okay, all right. Stay on, Anand. We'll come back to you with more questions in just a bit, but we do have to take a very quick break. Back with the last leg of today's market action in just a moment.
Welcome back. Still very flat for the markets. The Nifty is just inching, hovering around the 26,200 mark. We've asked you a lot about IPOs in the past, the ones when they open, and you've always said that you're not a big fan of IPOs, especially once they open, they're priced to perfection, and so on and so forth. But generally wanting to get your views in if you've had a look at Meesho, and the other one is PhysicsWallah, because they are catering to a TAM, which is what we call as Bharat, where it's the tier 3, tier 4 cities. And these companies are large. Like even Meesho, we were just chatting with the management, their revenues are annualized are more than 10,000 crore rupees. It's loss-making right now, but how do you like companies where the ARR, the ARPUs, or the average order value is very low and they're catering to the underserved market? What are your thoughts generally on the opportunity and the penetration here?
In most cases, the challenge is where are you going to be increasing the revenues from? Because if you are going to lose money, and Meesho is actually a very great execution story. They have tapped into a niche. I know people who work around me who are using this on a regular basis. So it is not, there is no question that they have done a fabulous job in terms of building that market. But that market is extremely price sensitive. So your ability to increase revenues does not come from being able to raise prices, but only from volume increases. And I would argue that much of that penetration is actually available already. You may be looking at numbers which seem to suggest that it's not highly penetrated, but that's because perhaps there is no market below this. So the question really is, what are you going to do to be able to increase the sales value, and how much more can you increase? Because even if you keep adding categories, the total pot of money available in the hands of their target customers is not very high. So the only other option is to actually reduce your procurement cost and find greater margins there, which again is a challenge because you are already dealing with businesses which are, probably pricing it to the lowest that they can. Net, it's a difficult market. At some stage, maybe it will break even. The question is, on a sustained basis, will you be able to make an ROE which makes sense? And I think it is still a little early to call that.
But Anand, there'll be a couple of ideas, right, that you like. Even in a market like this, which is looking expensive and earnings growth is not coming about, there'll be a couple of niches that you like, right? If you could name a couple of them.
Well, I don't think that you can make an argument for valuation anywhere. So the only question is, where are you finding sustainability? And I think that is actually easier to find in the larger companies. I mean, I think a Reliance or an NTPC or, the power sector, power grid, or even some of the, for example, the pharma companies, the large big ones which are doing, for example, CDMO, none of them are cheap. But with that said, they are still likely to be able to continue to grow in a difficult market. And more importantly, if you find a situation where we actually get a tariff trade, you will see some upside coming through in many of these, as much as perhaps the smaller ones. I think the argument that is being made in the market that we should be looking at the wider market, I find myself a little hesitant in accepting that.
So finally, before we let you go to enjoy the weekend, Anand, I mean, I was just discussing this while doing the weekly wrap as well, right? It's an all-time high, but one without broader participation. So tell us anything interesting that's come on your radar, any new company or stock that you would be studying, something, beyond the large cap screen, something in the mid cap space worth looking at.
Like I just said, I would restrict myself to the large cap right now. There are always themes that one can be looking for, but broadly, I don't think that the Indian market leaves you any upside in terms of valuation. So you're only looking for earning from an order viewpoint and seeing where there is, and there is greater security in the bigger companies.
Okay, fair enough. So you've driven that point home. And that point has been well taken. Thank you for joining in. Slightly cautious view coming in from Anand Tandon there. Says that he will stick to large caps. And the large caps have done well after a long grind. This is a week that will be remembered for at least hitting that all-time high level. Though we've not built conviction, on that. That's been the grudge of the week, so to speak. Anyway, let's take a look at the final rates then. We've got an absolute flat closing this Friday afternoon. The Nifty is down about 6 odd points, 26,200 thereabouts. Ditto for the sensex, 13 points up. Mid-cap index flat, bank Nifty flat. Actually, everything is flat if you look at it today. In terms of the indices, there's been some buying on the auto space, and that's reflecting in the large cap names. So M&M 2% higher. There is Bajaj Auto, which is about 0.5% higher. Eicher Motors managed about a 0.6% gain. Other gainers of the day included Sun Pharma. There was Adani Enterprises up about 1%. Reliance provided some support, 0.5% up on Reliance as well, and as did Lever. Lever was up about 0.7%. But then let's see where the pressure came in from. Lots of financials, actually a lot of the non-banks, they've come in for some profit taking. So SBI Life and HDFC Life, both of these stocks are down between 1.5% to 2%. Shriram Finance has lost about 1.5%. Eternal is at 300. It's lost about 2-3% this week. There's Bharti Airtel, which has been down today about 1% or so. And IT. IT has had a great week, 1.5% for the week. It had a great month, almost 5-6% up for the month. But there was profit taking today as we got fresh commentary from the US president that sounds a bit worrisome on the whole immigration issue. So HCL Tech, Infosys, a lot of the large cap IT names, HCL Tech, all of them on the downside. Okay, let's see what really stood out in terms of the broader market. The index was flat, like I was saying, but there were individual names. Eureka Forbes, 8% up on this one. Wellspun Living, 11% up on Wellspun Living. The stock immediately reacted. You just heard the statements from the Commerce Secretary. Let's pull up the other ones as well. Gokuldas Exports, perhaps, and some of the other exporter stocks, because the Commerce Secretary has just indicated that maybe we'll see a deal before this year ends. And some of these stocks are reacting to that. LG Bala, 5% up. So these are some of the names on the upside. Bell has gone. On the losing side today, Gail, obviously, stock in news, down about 4%. MCX down about 3%. Wockhardt lost about 3.5% as well. So these were some of the names that really stood out. IEX is mired in all kinds of, legal complexities. Ends down 1% for the day. Well, the bell has gone, and that's where we take your leave on this edition of Closing Bell. Thank you very much for watching, but don't go anywhere because all the action continues. Up next is Editor's Roundtable.